In this video, we introduce the features of our web-based visual analytics tool called MiningVis. We developed MiningVis for the analysis of historic data related to Bitcoin mining and mining pools more specifically. Bitcoin mining has become an industry where miners gather into pools to maximize their investment in mining devices. Our exploration starts out by a look at the overall timeline here at the top, showing by default a mining concentration index. This index tells us how fragmented the mining market is, or to what extent it is dominated by only a few pools. Here we can see that the mining concentration index increased in 2013, just after the first halving day when the Bitcoin network reduced the mining reward to half of its previous value. We can filter all other views to this particular time frame to see more details about what happened. The main view shows the ranking of the top 10 mining pools in this selected time frame. Mining pools are currently sorted by the proportion of the total hash rate, which we call the market share. We can see that BTC Guild increased its market share and remained the top pool for almost all of 2013. Ghash.io came on the scene in August and increased its market share until it became the largest pool. Other pools like 50 BTC and ASIC Miner did well for parts of the year, but then seems to have stopped operations. By changing the measure to the total hash rate, we can see the intensity with which mining pools increased their hash rate during the time frame. The detailed view on the right shows the almost exponential increase of hash rate for Ghash.io and the other pools clearly. The total reward measure can show us, either in Bitcoin or here in US dollars, how much money pools made from mining. $31 million for Ghash.io at the end of 2013. The details on the right, however, show us that the increase in hash rate did not lead to a comparable increase in mining rewards. Looking at the Bitcoin statistics in that time frame can tell us that in particular earnings from transaction fees went down, and that the market price of Bitcoin saw a sharp increase at the end of 2013 before going back down. Coming back to our market share percentage view, the rise of Ghash.io seems interesting. We can search the news at the bottom to see if we can find out what led to the popularity of this new pool. Browsing the titles of the news, we see instead that there seemed to have been fear over Ghash nearing 51% of the total market share, and therefore being able to manipulate the system. Looking at the detailed view again, we see that Ghash reached its peak market share at 37%. There's also one particular article that seems to say that the market share dropped to 28% as people were leaving in fear of this 51% attack. The pool hopping view here shows the number of incoming miners and the number of exiting miners for this particular pool, and we can see that a larger number of miners were incoming than going out. However, we still do not know what potentially led to the popularity of Ghash. We do know, however, that in the competition to attract miners, payout schemes and pool fees are major pool characteristics that directly impact miners' income. In the detail view, we can see that Ghash.io used the PPLNS payout scheme and kept 0% pool fees, indicated by the gray line here at the bottom. Its main competitor, BTC Guild, offered two different payout schemes, indicated by these two lines, which each required a specific pool fee. PPLNS favors constant loyal pool members, which is something we see confirmed in the pool hopping view, where only very few miners for Ghash.io actually cross-pooled with other pools. BTC Guild, on the other hand, offered the PPS Plus payout scheme, and subsequently lots of miners cross-pooled, for example, with F2 pool or slush pool. We conclude that likely the low pool fees led to Ghash.io's success. In summary, MiningVis consists of multiple views that bring together various related types of data about the Bitcoin mining ecosystem.